All right, let's talk about what just happened. Bitcoin absolutely shattered a critical line in the sand. We saw a brutal correction that smashed right through the $90,000 support level, and it sent total shockwaves through the market. So what was really going on here? Was this just a simple panic sell-off, or was there something far more calculated at play? We're going to follow the money and uncover exactly what drove this massive drop.
I mean, this selling pressure was just relentless. At its worst, the price cratered all the way down to $89,409. Now, this wasn't just some minor dip. This was a devastating 7-month low that completely wiped out every single gain Bitcoin had made this entire year.
And this wasn't just a Bitcoin problem. Oh no, the shockwave just ripped through the entire crypto ecosystem. In total, over $600 billion in value was just erased from the market's peak. This wasn't a targeted hit, it was a massive flight from risk right across the board. And just like that, a staggering amount of value simply vanished. You know, if you really want to get a sense of how the market felt during all this, you just have to look at this number. The Crypto Fear and Greed Index absolutely plunged to a 10 out of 100. That signals extreme fear, and it's the lowest it's been in 9 months. So this tells you the drop wasn't just about the price on a chart, it was a full-blown crisis of confidence, especially for regular retail investors. Okay, so that brings us to the big question, the reason we're doing this explainer. What, or maybe who, was really behind all this? To understand a crash this big, you have to follow the money and look at the major forces at play, both inside and outside of crypto. So let's start with our first major clue. The thing that really kicked this whole event off, the immediate catalyst, was a really rapid exit by some of the biggest players in the entire game, institutional investors. All of a sudden, the so-called smart money was aggressively heading for the exits. And what was their escape route? Well, it was primarily through these things right here, Spot Bitcoin ETFs. You can think of these as the main superhighway for big professional money to get in and out of the Bitcoin market. You know, these same ETFs were the engine that drove the big rally earlier this year. And now they were the express lane out the door. And right here, you can see the sheer scale of that exodus. The 11 US-listed spot Bitcoin ETFs bled a collective $2.5 billion. I mean, just look at BlackRock's IBIT fund. It's a huge barometer for what institutions are thinking. It alone saw over $1.2 billion get pulled out. That is a tidal wave of selling pressure hitting the market all at once.
Now, all this institutional selling kicked off a truly destructive domino effect. Here's how it worked. First, the big institutions sell in bulk. That initial push breaks key price levels. That, in turn, triggers automated sell orders from traders who are using leverage, forcing them to liquidate their positions. This forced selling adds even more downward pressure, which causes, you guessed it, even more liquidations. It's a cycle that just feeds on itself, creating a real market contagion.
But why? Why did the institutions get so spooked in the first place? Well, they weren't just looking at the crypto charts. They were looking at the entire global economic picture, and frankly, they did not like what they saw. There were a bunch of major economic headwinds brewing. Hopes for an interest rate cut from the US Federal Reserve? Yeah, those were fading fast. Inflation was still stubbornly high, and that whole combination creates what we call a risk-off environment, where investors dump their riskiest assets first. And right now, a lot of institutions treat Bitcoin just like a high-risk tech stock. So when the tech sector gets shaky, Bitcoin really feels the pain.
This quote from the analysis just sums it up perfectly. What it means is that right now, the big picture economic news has the ultimate power to veto anything else that's happening. It literally doesn't matter if there's some positive crypto-specific news. A negative macro outlook can just override everything and send prices tumbling.
Okay, so here's where the story takes a really fascinating turn. While all of this institutional de-risking and retail panic was going on, another group of investors was doing the exact opposite. This is a classic tale of two completely different strategies unfolding at the exact same time. So on one side, you've got the retail investors. They're driven by that extreme fear we just saw, capitulating, selling at a loss. But on the other side, you have the whales. These are the large, sophisticated investors. And they didn't see a crisis. They saw a buying opportunity. And they began strategically accumulating Bitcoin at a huge discount.
What this really is a classic market shakeout. It's a violent, yes, but ultimately it's a cleansing process. See, the selling wasn't driven by some universal loss of long-term belief in Bitcoin. It was driven by the forced liquidation of weak, over-leveraged positions, effectively shaking them out of the market for good.
So, after all of that chaos, the institutional exodus, the macro fears, the whale accumulation, where does that leave us? Well, the market is now sitting at a critical crossroads, with a very clear battleground ahead defined by some very, very specific price levels.
This table basically lays out the roadmap. For any real recovery to happen, Bitcoin absolutely needs to reclaim those resistance levels around $91,000 and eventually that huge psychological barrier at over $100,000. But the real danger lies below. The market has to hold support around $85,000. If it fails to hold that critical support level at $80,000, well, that could signal the start of a much deeper, longer-lasting crypto winter.
So where do the actual financial markets think this is all headed? This chart shows you just how uncertain things really are. Analysis from the options market, that's where traders bet on future prices. It reveals that the probability of Bitcoin finishing the year either above or below $90,000 is split right down the middle, a perfect 50-50. The market itself has no idea which way this is going to break.
And that leaves us all with the final, defining question. Was this whole thing just a necessary, even if it was brutal, shakeout of speculators, clearing the path for the next big move up? Or was this the first major tremor, signaling the start of a long, cold, and painful crypto winter? The clues are all there, but for now, the entire market just holds its breath.